we got 3 clues from the Russell. The first one was the price wedge. The price wedge, you can see right here. What does a price wedge tell me to do? A price wedge says, as price rises, sell. Price wedge says, as price falls, buy. Which goes completely against what our second clue was, which was mark up your previous highs and previous lows. Completely against, because what does an outside day tell me? Our second clue, an outside day says, well, if we're above the previous highs, you're buying pullbacks. If you're below the previous lows, you're selling retracements. An outside day is the complete opposite personality of a price wedge. Now, remember, in the month of August, we made a killing trading price wedges and inside days. This is a price wedge and an outside day. Outside day says, get on your horse, giddy up, right? We're going higher or going lower. But what does an outside day tell you if it fails? Remember, here's my previous day's range, right? That's Monday's range. Well, what happens if the price wedge goes up and then comes down inside the range from Monday? Well, that now becomes, right, not an outside day. Now that's an inside day, right? So one of the things we knew is that whenever we have an outside day, if we're over the previous highs, it's buy pullbacks. If we're below the previous lows, sell retracements. But very important though, if the outside day fails, and if we end up coming back down into that range, that tells me if we fail at the highs, sellers are in charge. If we fail at the lows, buyers are in charge. And remember, if we're inside the range from yesterday, I'm going to expect to go from top to bottom. Okay, if I come back down in, I'm selling aggressively, bring it back down to the lows of that range. So outside day is a big clue, but it's the exact opposite of what the price wedge is telling us. And then the third clue we got, double tops, double bottoms, flat trigger line. Again, the easy one was that trigger line right in the middle, all flat like that. Okay, and that gave us our sideways market or our sideways range. Now, what happened today was we knew we had the outside day. Okay, so the outside day told us, and again, it's above the previous high of day here. So the outside day tells us, get on that horse, giddy up, and buy pullbacks. Okay, but then we notice, wait a second, we got a wedge right here to worry about. And remind me, folks, how do we trade a breakout on a wedge? I'll give you a hint. There's a video right on our blog right now. Just type in trading breakouts in the blog and you'll find that video. It's a great video. It talks about fakeouts and breakouts. So now we, of course, have the wedge here. But how do we trade a breakout of a wedge? We find resistance overhead, support below. So for example, if I want to break out of this wedge, I have to get above this resistance. Then what I'll do is I'll buy a pullback using that previous resistance as support. Okay, I'm not just simply going to buy the highs of that wedge, right? That would be trading suicide. And then of course the downside, same thing. Okay, for a price wedge, I want to get below these levels right here, right? Get below both of these wedge lows right there. Get me down through those lows. That support turns into resistance and I sell a retracement below that resistance. Okay, so in order for me to trade a breakout on a wedge, we have to go through the overhead resistance, then buy the pullback. That way I know the buyers are in charge. Okay, I can't just simply buy the break through the highs of the wedge. It will come tumbling right back down. Okay, if you buy the break of the highs of the wedge, I'm the guy taking your money when I sell the highs of that wedge when it fails. All right? So we know how to trade a wedge. And we knew that an outside day meant we should be going higher. And what happened was we went in, we looked at our 686.3, 682.5, and you'll notice, if I can zoom in real here, it's tight, but you can see here, there's a space between these two. So the wedge high and the previous high of day, I know it's small in this chart, but it was much bigger in a faster time frame. Basically, we had a very small window of opportunity to buy above the previous high, taking profit at the trend line. Because again, I'm not going to buy through that trend line. And then if we broke through, I was then going to buy a pullback and keep going higher. So we had a pretty good plan of attack. If we broke above the previous high of day, we're buying pullbacks. But we know we can only go so far because we got the top of that wedge right there. And then to throw one more thing into the mix, we knew we had a sloppy personality because of that BMT right there. All right, so a very small window above the previous highs to take advantage of. Be careful about the overhead resistance, right? That trend line. And if we did break it, I'm going to simply buy a pullback and keep going. Now, what actually happened was here is we traded pretty well above that previous high of day. I had a couple winners above it, but then never got the breakout. It failed. It came right back down, and that's where our biggest trades of the day were. We took a 40-tick winner, took a 30-tick winner on the way down, and again, selling the range, selling the highs of the wedge. Now, my 9:30 U.S. Open, remember guys, things get sloppy, so I'm not trading around the open from 9:15 to 9:35. And you'll notice we were watching a wave pattern setting up here. We were watching a 34 range wave pattern setting up. In fact, you can see it right here, right? This is a 34 range chart, and you can see, right, the wave pattern right there. Okay, so that's a 34 range wave. All right, guys? So now you kind of know what we were watching at that time. Now, we had just tested the previous high of day. So we are expecting now this thing to keep going. And a 34 range wave pattern, we talked about this morning, a 34 range wave is a little bit different personality traits than a 21 or a 13. Basically, if you take a 34 range wave pattern, you're going to have to take it almost like a position trade. Okay, place your stop, place your target, and don't get wrapped up in that whipsaw inside of that move.